Hey guys, it is Julie here with TipRanks, and today we're taking a look at 3 stable dividend-paying stocks to help us weather volatile markets. So let's get into it. Alright guys, welcome back and thank you all so much for being here. Now, volatility seems to be the theme of the market this past year, and recent weeks have been no exception as the banking industry was the latest to come under pressure. So during times like these, it is great to have some solid dividend-paying stocks within your portfolio to help weather out these storms. With that in mind, today we're going to use the TipRanks stock screener to find us a few stable dividend-paying companies that could be a great fit for your portfolio. So let's take a look. Using the TipRanks stock screener, I'm going to focus on medium to mega market caps as those bigger established companies will have some more stability. We are looking for some upside potential and of course one that has a positive dividend yield. I also want one that has a likelihood to outperform the overall market, and I am going to exclude a couple sectors that have seen some more volatility lately. With an analyst strong buy consensus, this gets our list down to 89 different stocks here. Of course, there are a lot of great companies on this list, but we're going to focus in on a few that caught my eye, starting off with a company called LIN. Their stock trades under the ticker LIN, currently priced at $340 per share. Now, I was less familiar with LIN, so coming down to the company description, we can see that they are a UK-based industrial gas and engineering company. They serve a variety of end markets, including chemicals and refining, food and beverage, electronics, healthcare, manufacturing, and primary metals. Taking a look at the chart, we can see they are up slightly over the last few months and have been on a pretty consistent climb over the last few years. Of course, there are some up and downs, but nothing too drastic. Another thing that we love to see down here is a beta. Theirs comes in at 0.79. Now, beta indicates how volatile a stock is compared to the overall market. So if the overall market was a 1 and our stock was a 1, you'd expect them to move in pretty similar fashions. A beta higher than 1 means that the stock is more volatile than the overall market, so a beta less than 1 means we can expect less volatility. Taking a look at their dividend info, we can see that they pay a quarterly dividend of $1.27 per share for a yield of 1.4%. Now, that yield might not sound very impressive, but when we are looking for a more stable long-term dividend, we're actually not looking for really high yields in the double digits. A nice low but consistent one is more important. The company has a payout ratio of under 39%, and here it shows dividend growth of 14 years, but that's actually just as far back as the data goes here on the site. They've been paying a dividend since 1994. LIN reported their recent earnings back in February, so the next will be coming up on May 12th. They'll be anticipating earnings per share of $3.12, an increase from the previous year. And looking at their track record, we can see that they've comfortably beaten their earnings estimates for the last while. Following that last earnings report, we had plenty of analysts coming in with new price targets. The stock comes in overall as a strong buy based on 17 ratings. The average price target comes in at $380. That would be an upside potential of over 11% from current prices. And we can see a lot of buy ratings coming in following that earnings report, all with 10 to 20% upsides here. Of course, with a stable dividend company, we're not expecting explosive growth in crazy high double digits. We are looking for more of a slow and steady performance, so nice to see those reasonable price targets. Next up, we have worldwide payments company Visa. Their stock trades under the ticker V, currently at $221 per share. They have also seen some pretty steady growth over these past few years, and they come in with a beta of 0.95, so just below average market volatility. Visa is well known for their impressive balance sheet, and their earnings back in January were no exception. The company reported total revenue of over $7.94 billion. This number has been growing consistently for the past year. And taking a look at their dividend, they pay a quarterly dividend of 45 cents per share for a modest dividend yield of 0.74%, but with a very impressive payout ratio of just above 20%. With 21 current analyst ratings, the stock does come in as a strong buy, and analysts are feeling a bit more bullish on this price target. The average price target for Visa comes in just shy of $260, which would be an upside potential of 17% from current prices. Taking a look at our most recent ratings, we do have several 5-star analysts weighing in on the stock, and a lot of upsides ranging in the 20% area. And third on our list is beverage behemoth Coca-Cola. This company is a dividend king. They've been increasing their dividend for 60 years running. Their stock trades under the ticker KO, currently priced at $60.50 per share. They have a great beta down here at 0.58%, implying some pretty low volatility compared to the overall market. Coca-Cola does have the highest dividend yield on our list today. They pay a quarterly dividend of 46 cents per share, coming in with a dividend yield of 2.94%. And like I said, they've been increasing that dividend for 60 years running. Their next earnings report will be coming up in about a month's time on April 25th. We'll be expecting earnings per share of 65 cents, fairly in line with last year. And this is another company that has a very stable history of meeting those expectations. Taking a look at recent news articles, including the Coca-Cola stock, we can see that Coca-Cola is a favorite among investors for high-quality blue chip stocks, forever stocks to buy and hold, and plenty more lists like the same. And it is well-liked among analysts too, coming in as a strong buy with 12 current analyst ratings. The average price target for the Coca-Cola stock comes in at $68, which would be an upside potential of nearly 13% from here. Now, the most recent rating does come in as a hold with a very slight downside, but previous to that, we have plenty of double-digit price targets coming in. So those are 3 companies that could help weather some volatile times in the market. Not only do we have some stable dividend income, but we also have analysts predicting some upside potential there as well, and betas that indicate less volatility compared to the overall market. Now, there are a lot of great companies like this out there, so let me know your thoughts in the comments down below. I always appreciate hearing from you guys. Keep in mind these videos are never a suggestion to buy or sell any specific stocks and just meant for entertainment and information purposes. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.